Okay, so today we're answering the question, is there such a thing as safe money? And Glenn will be clarifying misconceptions about safe money today. And have you ever heard the statement, money does not grow? And Glenn will be talking about that as well. So just stay where you are, and you will learn much more about what really is safe money and the types of safe money that there are. So thanks so much for joining. My name is Genese Smith, and I'm a dream builder and transformational life coach. And I love to help individuals build their dreams and step out in confidence, especially after a challenging time in their life. So welcome to another video in our series, Financial Dream Building. And this series actually just clarifies a lot of misconception people have as it relates to money and just help you make more informed decision. And if this is your first time here and you want to learn more on financial dream building, just start now by subscribing and clicking the bell so that you don't miss anything. And if you have any comments, just leave them down in the comments below, just to help other people that might watch this video. So Glenn is a financial advisor as well as an infinite banking practitioner, and he provides his expertise around the topics of insurance and financial education. Glenn is very passionate about what he does. And if you have missed any of the videos with Glenn in our series on financial dream building, you can just go ahead and check them out in the financial dream building playlist. Glenn, welcome back to another week in our series.
Hey, thank you, Genese. Glad to be here again with you.
Yes, me too. I mean, today I'm just looking forward to hearing about safe money, and I want to know all there is to know about safe money. So Glenn, please go ahead and just tell us what you have for us today.
Well, we're definitely going to go through a few things, right? So I guess what safe money is classified as is money that can't actually go below what you started with, right? Mm-hmm. So truly safe, not subject to market fluctuations. That is what we're classifying as safe money. So we're not saying, you're invested in the market, but you're invested in a conservative fund. This is specifically cash-like instruments that can't be negatively impacted by down markets, right? So to do that, we're going to share my screen here because I'm going to go through a little bit of an exercise. I probably should have had this on. Okay. Share. Okay. So hopefully you guys can see my circle of wealth here. Very powerful tool that I use quite a bit, right? And this one talks about safe account types, right? So on the right, you guys are going to see here on the right, it talks about what are the benefits that we can have of these, right? And you've got the tax deferred growth, you've got the tax-free distributions, you've got competitive returns, you've got high contributions, you've got additional benefits, collateral opportunities, and of course, safe is safe, no loss provisions, guaranteed loan options, unstructured loan payments, liquidity use control, and deductible contributions. So really, what are those? Well, what it is a list of, it's kind of a wish list of what a place we could put our money could have, right? Those are all the things that are possible. So what it is to say, okay, if my money's here, these are the things that would be fantastic if I had. And we're going to look at different types of safe money to see where they come in on that scale, right? So let's start with GICs, Guaranteed Investment Certificates. So many people are familiar with these, right? If you've got a bank account, you've ever gone in there, you've probably talked about GIC, right? Now, here's the pluses and negatives. So if you look on the far right, you see benefits. You have high contributions. So if you've got $1 million you want to put into a GIC, you could do that. If you are the collateral opportunities, yes, because if you've got a GIC locked in, you may be able to leverage a loan from the bank. Is it safe? Definitely. You can never get less than you put in. And no loss provisions? Definitely. Again, you can never get less than you put in. But if you look on the important considerations list here, it says interest rate tends to be relatively low. Now, any of us with a savings account or a current GIC know how this is right now. The great thing is money's cheap to borrow. The not so great thing is money is really, really cheap and you're not getting much on your money just sitting in a GIC, right? And then when you do get some, the second bullet point there, interest is taxed at ordinary income tax rates. That in itself can be so deflating, right? I get very, very little interest. And then whatever interest I get is taxed at current rates. Right now, you can negotiate because different banks, so you could say this other bank over here is giving me this. You can negotiate your rate a bit, but you don't have a wide range right now. Call provisions normally included in loan covenants. We won't even touch on that right now. Accounts are subject to creditor attachment. Unfortunately, if you have creditors and you're in a regular GIC, that's a possibility. Liquidity from loans not assured unless you negotiated a previous credit line. So, if you got money locked in, you may be able to break it, but to get a loan against it, not a guarantee. You still have to qualify. And then the underlying principle is tied up for a fixed period and penalties exist for early withdrawal. So we've got this GIC that's locked in. I need access to the money, but if I go get it out, I'm gonna have to break the GIC and pay a penalty while paying full tax on the growth. It's not sounding too comforting, but it is an instrument nonetheless. All right, so let's look at cash next. Well, it's your savings account. If you look, you see cash hits 6 of the things here. Now it says tax-free distribution, which is a little bit off because if it accumulates interest, then the interest, just like the GIC, will be taxable. So the tax-free distribution will be of the money you put in, but not of what is growing. And then you have 6 of the points here hit with tax, right? Again, similar things. Money tends to be low right now if you're sitting in a checking account or savings account. Interest rate is taxed. Ordinary income tax rates. That is so depressing. I'm not getting much money, and then what I get, I have to pay full income tax on, right? And very similar to the rest. Money market's going to be similar. Money market's a little bit of an investment instrument. Now, this one can fluctuate a little bit below where you start, but not by much, right? And it's hitting 5 of our points on this side, right? And the rest are pretty much the same. So I'm not going to go through all of them for everyone because they're very, very similar. So we got money market, we got cash, we got GIC, we've got savings account. Savings account and cash are basically the same thing because in most cases, whether it's checking or savings, it's the same thing. So pretty much a mirror of each other, right? But again, the interest being taxed at ordinary income tax rates. If you're getting 1% a year, think of this. You put in $10,000, you make $100 for the year. Right, and then you got to pay full tax on the 100. So depending on your tax bracket, you're going to pay anywhere from $25 to $48 in taxes on the $100. It's a little depressing, but I'm not going to give you guys all bad news without giving you some hope. So bear with me.
Right.
So the next one we've got where are we? Fixed annuities. Fixed annuities hit 5 of the 6, but you have some interesting things here. So tax deferred until withdrawal. Right? Now you do have a penalty for early surrender. The gain is taxed as ordinary income again, but at least these rates on an annuity is generally a little bit higher than the rest. It's depending on age. Really, your age is a big factor plus rates, right? But the key is it's often used to provide steady income stream during retirement. So as long as you're alive for a typical life annuity, whether you live till 80 or 105, just like with your Canada pension plan and your old age security, they're just going to keep on paying you if you've got a fixed annuity. And annuities tend to get a bad name sometimes, but it really is situational. Everything we talk about is a tool. And if a tool fits me, it doesn't mean it fits Genese or you. So that's why having one-on-one conversations to figure out if this tool makes sense for me at this time is best, rather than saying, well, my brother or my friend did this and it didn't work for them. So again, this is why you need to talk to an expert, okay? But this is a step up, so to speak, because you get a higher rate and you get paid on that as long as you're alive. And it can provide additional benefits like long-term care and insurance, depending on how it's set up, right? Possible benefits of tax-free distribution and deductible contributions. We're going to leave that one alone because that, as it says, possible, typically not the case. Now we're going to get to the last one on the list. Now I want you guys to look at the right side and I click this. Permanent life insurance. Now if you guys look over here, you notice almost everything's lit up. Well, how can that be? Well, we're talking whole life policy, specifically dividend paying whole life, tax deferred growth. tax-free distributions possible. Competitive return, you bet, way higher than the savings and the typical GIC rates. High contributions, depending on what you qualify for, yes, can be substantially higher. Additional benefits, definitely there. Collateral opportunities. Okay, guys, I'm going to slow down here. Think of this like your house. And I've talked about this. Genese and I bought houses on the same block, same builder, same year, right? Now, I'm really, really conservative. So I say, I'm going to pay for mine just like Genese over 25 years, whatever. We pay the same payment, we get the same rates, just play along with us. 15 years in, there's an opportunity, but my thought is, if I got to do it now, I have to sell my house. And Genese is going, wait a second, no, you don't. I've got equity. So if I can use my home as collateral to tap some of that equity to go take care of this opportunity, now I've increased my wealth in two ways. The home I'm in, plus now the asset I'm going to purchase that should grow, right? So there's collateral opportunities. Now, just because I'm going to be the kind of guy who goes, nope, nope, don't want to mess with that. I'm not going to touch my equity. And I don't do it. 10 years later, Genese has made some substantial gains there, as well as gain in the house price, right? Because our price of our homes keep going up. Mm-hmm. Did Genese tapping her equity change the value of the house? No. She got to use collateral to go take advantage of opportunities. Hope you guys see where I'm going with this. Okay, permanent, well set up insurance is exactly the same. Is it safe? You bet. It's cash, so it cannot negatively be impacted by markets. So whatever cash you have available today, it has to contractually be more cash in there tomorrow and the day after and the day after, minus any loans there might be. But understanding with a loan, and we're not going to get it too deep into the weeds today, whatever I owe today will be more tomorrow, but also what I have access to today will increase tomorrow, right? And there's a few reasons for that, but that's going to be more of another video. No loss provisions. Again, it's cash, can't go negative with the market dropping 20, 30%, whatever the case may be. Guaranteed loan option. Now, guys, I don't know. I every time I say this one, I get excited. There is nothing to me like knowing that what you see, you can have access to. Think about it. All the equity in your house, or I shouldn't say all, you've got a bunch of equity in your house. And you know, if you need access to it, you can get up to 90%, no questions asked. Does that exist right now? No. Does that exist with the right type of policy structure the right way? You better believe it. And it's used all day long, every day by people right across this country, including myself. So guaranteed loan option, knowing that the dollars you have there, you have access to up to 90% of it anytime you want. Now, the next point down, the unstructured loan payments. Oh, it gets even better. All right. Suppose, I borrowed some money from my line of credit. Let's say I have a line of credit and I got to pay $500 a month. What happens if I don't pay for 2 months? I think the bank's going to call me and say, hey, we're going to shut this down, turn it into a loan because you haven't been honoring your commitment. Well, guess what? With permanent life insurance and the unstructured loan, if things are a little tight for a couple of months, I can just say, you know what? I'm not going to make any payments. Nobody will call you. Yes, the interest still applies, make no mistake. But to have control, guys, control over your payments because they're unstructured and it is completely and utterly up to you if and how you make those payments is fantastic. And of course, that leads to liquidity use and control because I have liquidity knowing that if I need access to those funds, they're there. I just got to ask for them, right? I get to use them how I want. Nobody's going to say, what are you borrowing this money for? No. Control, isn't that the ultimate control? That you can have access to your funds when you want, for what reason you want, make repayments how and when you want. That is control. Now, the one thing not there is deductible contributions, and I'm kind of glad because that's what helps make it not taxable to access your money. Okay, so it hits 11 out of 12 things on this list, right? And if people understood just how powerful this was, and more people are starting to, right? Especially with us infinite banking practitioners getting out there and just shouting from the rooftops, more and more people are starting to understand how valuable it is when you can I'm going to say this, buy your net worth, intergenerational wealth, big buzzwords, buy your net worth and build your cash flow over time. And I'm borrowing that from Garrett Gunderson out of the US. When you get a permanent policy in place, you buy your net worth, because if you're going to keep that for the rest of your life, your net worth's building. When you die, that's tax-free money going to your beneficiaries. You're building your cash flow by each contribution you make each month, plus the growth. And it's never in equity jail, right? And again, not to knock the RSP because they're a tool, but understand this. If I put $200,000 in my RSP and I see an opportunity, a great opportunity for, let's say, 150,000, can I withdraw everything from my RSP to go pay for that opportunity? I cannot. If I try to take 200 out, I'm going to end up with just over 100. So I'll still be 40,000 shy. And that would be huge income for the year, right? Then that money's gone. If the market takes off after that, I have no opportunity to participate because I've used my money. Remember the house example with Genese, right? Think of all the people in Calgary in the last 2 years. Their housing prices have gone up, their values have gone up. But if they took their equity to do something else, that didn't affect the value. That is one of the great things about setting up a permanent policy and using the funds, infinite banking concept, where you can have access to the cash to do what you want, when you want, for how long you want. Notice I'm saying a lot of control there, right? So when you look at all the stuff on the left-hand side, cash grows tax deferred, right? Let's start at the top. Riders are optional, right? Those are different. Second one, key. Once dividends are paid, they become guaranteed cash value, guaranteed. It can be this one day and less the next, regardless of what happens. It's cash, it doesn't go low, right? Gross tax deferred, the loans are a contract feature. The contract is unilateral and provisions can only be changed by you, the owner. Now, your loans do reduce your access to available cash, just like if you bought out your house, but you don't have that minimum payment you need with your house. And your house value is not guaranteed to increase from year to year, whereas the access to cash in a policy is, right? And then let's say you have a big outstanding loan and you pass. So think about this. You got to have your insurance. You got to live your life and take advantage of opportunities. And there's still a tax-free death benefit to go to your family when you pass, right? Pays out the loan so the insurance company's paid back, and then the balance goes to your family tax-free. Huge. Your cash value deficit during the capital, okay, basically, it takes a little while to build up the cash, right? But if you're buying a house, do you automatically have equity? It takes a while to build up the cash. I use a house analogy because so many people can identify with that. Right? And then depending on what riders you have, disability waiver can pay premiums if you're unable to work due to sickness or disability, if you add that in. So guys, again, it's one more thought of thinking differently. Rethink your thinking. These are safe instruments, but typically, as I did with most of the examples, the safe instruments don't really make much for you, right? And to access them, you're gonna have taxes as they grow on very little money. The permanent insurance is where it's different. And for more information, I can gladly have a one-on-one chat with you on that. But just wanted to show you guys the things that are, as you can tell, I'm excited, right? Because I'm putting this to more and more people. They're finding out the wonderful world of having control, being able to guarantee intergenerational wealth via that permanent death benefit that grows every single year. Have use of your cash and liquidity for opportunities or emergencies that come up, right? And still be able to have not just the asset of the insurance, but use the collateral to go acquire other assets or just for lifestyle. So yes, Genese, I'm very excited. And I love to share this with people because I like to see when the light bulb comes on and they start getting it, that there are better ways to do what we've been doing to get to where we want. Any questions for me, Genese, while I'm running through this?
I don't have any questions for you. I mean, I'm just saying that, every time I hear anything about tax deferred, that's what I love most. Anything that's tax deferred for me, right? And, I want to know that I like the idea too that if, you can't work, there's a disability waiver too. I mean, I like that. But I mean, there's so much advantages and I like how you talk about, the structure, we would like to have things structured properly, right, for us. So yeah, I don't really have much thing, but it's just like really powerful stuff, right? And there's so much meat in there, and so much up for discussion.
I try not to overwhelm too much, but sometimes it's just, you gotta get that little point in there. It's like this done right. I keep saying that this done right is fantastic. And that's why being an authorized infinite banking practitioner from the Nelson Nash Institute. Nelson Nash is the gentleman who discovered this process, wrote a book called Becoming Your Own Banker. Fantastic book. And again, authorized practitioner, went through a course of study, done some training to present this particular setup, and then showing people and coaching them on how to use it for the things in life that you want and need, right? So authorized practitioners, now mind you, in Canada at this time, there's less than 50 of us, 50 across this great country, and I'm one of those. And I find that a great privilege, and it's just fantastic to show people options they didn't realize they had. And not only can you do some of the things you've been doing traditionally, but you can use this to enhance them, right? So excitement.
I love it. I love it. And I mean, if you're out there, if you have lots of questions, if there's some clarification that you want, feel free just to type in the comments below. I'll check those comments, and Glenn would be more than happy just to answer these questions. And if you need another session where we're just answering a few questions, I'm sure Glenn would be happy to do that. We can set that another time too for you, so just type in your comments, type the questions, things that you're concerned about. And if you want a one-on-one consultation, all of Glenn's information is also in the description below. You can always just check that out. I just could see just the fire and the flame and the bulb lighting for Glenn.
This excites me because I've set up my own for my family and use them and use the loan provision. And I'll be honest with you guys, the first time I'm like, okay, it cannot be this simple. Let me just test this out. Okay, did a loan, no questions asked. Oh, money's in my bank account within a week. Okay. Oh, let me see if they're going to ask me to make a payment. Oh, a few months go by, nothing. Oh, this is fantastic. Now I've paid that back, and I'm on my 5th loan now because, different things come up that I want to do. But I'm going to leave it at that. This is getting too long. As you can tell, I'm very excited. But the reason is living this process, not just knowing it, living this process has been so freeing. I just want to make sure other Canadians have access to that feeling too. Right? So let's chat, subscribe, like, right? And Genese, I'll turn it back over to you.
Great. Yeah, so thanks again, Glenn. I really appreciate all the information. So I mean, you're really walking the talk, and that's great. So you're not advising someone to use something that you haven't actually tested yourself, which is really good, so we love to hear that. So we're just glad that you could join us, and just remember, send your comments, and whatever else you want us to talk about, we'll be happy to do it. So you take care now, and then we'll talk to you another time. Okay, bye for now.
Bye for now, guys.